Welcome to the Co-Host Bros Podcast, where we break down everything short-term rentals, entrepreneurship, and building a profitable hospitality business. Whether you're a host, investor, or property manager, we share real strategies, real insights, and real experiences to help you scale smarter and grow faster. Let's dive in.
Hey everybody, welcome to another episode of the Co-Host Bros Podcast. My name is Matt Codd. I'm here with Austin Spitzenberger. Today we have Matt Floyd. It's Matt in the morning, so welcome to the morning show. No, that one didn't hit.
I love it. Happy to be here. Let's go.
Let's go.
I love it. Well, Matt, thanks for coming on, man. Long time overdue, and we're super excited to have you.
No, I'm just kidding.
Yeah, we'll have to go since it's a Matt and Matt.
Okay.
We'll just have to go Codd and Floyd. So I'll go Matt Floyd. What's up, brother? Man, I'm super excited to have you here.
Of course, excited to be here, guys. I think we're gonna have a good time already. Jumping right in. Let's do it.
Yeah, I love it, man. So for those of our listeners that don't know, give us a little background of kind of how you got here and what exactly you do in the space.
Yeah, man, it's been a fun journey. I mean, I started, I've lived all over the place. I'm a traveler, a frequent traveler myself, so I'm a heavy user of Airbnb. So I have a love for the industry and travel and exploring new areas. But I started investing in real estate while I was still working W-2. I was in sales for SAP, a big software company, and just taking all my extra commission and trying to put that into some real estate assets, and started with some multifamilies in Wisconsin. In 2018 with my mom, we went in together and still are great partners. So a ton of appreciation for her to try this out and jump into the boat, the real estate investing boat with me. We still have those units. We have 11 units in Wisconsin, 10 are long-term, 1 is short-term. And that was the beginning of the journey. That's what kind of got me going, got me excited about it. And then from there, I was looking to find that next deal, and I was going to some real estate meetups in San Diego, where I live here. Ran into my now business partner, one of my best friends now, Craig Garulski. Just met him at a real estate meetup. I was presenting on my smaller multifamily deal in Wisconsin. He had presented about his deal that he did in Nashville for a vacation rental, and I was blown away. I loved the style. I loved the design. It looked like a ton of fun. The numbers looked great. And it was a place that he could go and visit with his family and friends whenever he wanted to. So I loved that concept. It got me hooked. I started jumping in and was buying some in Nashville. And we were kind of off and running from there. So we were buying our own investments, still working W-2, trying to get everything up and running, doing all the design, the furnishings, everything ourselves. My wife actually started her interior design company based on those first projects that we invested in and did together. So it's been fun to see both of our businesses grow over the past few years since COVID. And then Craig and I decided to start an arbitrage business in 2019, December 2019. I'll never forget it. December 19th, we created the LLC. January, we negotiated 3 arbitrage leases with landlords in San Diego with investors. February, we got them all set up, designed, furnished. We bought all the furniture for them and got a bunch of bookings in. March 20th, COVID hit, and we lost 60,000 in bookings in a week. And we thought that was probably going to be the fastest business failure in the history of a business in about 3 months. But we made it through. It was tough for 6-8 months during that lockdown period. And we made it through. We got some midterms in there and really took a little bit of losses, but we pushed through that. And now our business has grown from those first 3 arbitrages into, we manage about 80 properties now. 2 are still arbitrages. 12 of them we own around the country. And then the rest of them we manage for others as property managers. So it's been a fun journey. Happy to share whatever I can.
Yeah, so you still do some arbitrage business as well as like traditional property vacation rental property management, right?
Yes, of the 80 or so, 2 of them are still arbitrages, and we spent those are bigger properties. We spent probably $25,000 for each property to furnish it and create a really unique ambiance there and make them stand out from the crowd, because that's what we knew was going to give us the margin to be successful. Over time, we've had those properties for a few years now. Over time, the margins have thinned out, right? Post-COVID, revenue on the vacation rental side has come down a little bit. It's stabilized again now. And then rents, long-term rents in San Diego have gone up like crazy, like doubled since I moved here. So the margins are thinner, and that's why we push towards managing other people's, so we don't have the overhead that you have with arbitrage.
Yeah. Oh, that's awesome, man. So like when did you start, I guess when did you start doing like outside of arbitrage when you kind of transition into property management? How long ago was that?
Yeah, we were getting some friends, family friends and colleagues that were seeing what we were doing with our own investments. And I think by doing our own investments, that opened the door up for that, where other people said, hey, I want to do the investment, but I don't know how to manage it. Can you guys take that over for me for a percentage fee? And when we first started, we were giving sweetheart deals, right? Really low percentages, just helping friends and family out. And some of those turned into partnerships, which was great. And then there were a couple of referrals from realtors that we had purchased the properties from. They knew that we managed as well, so they were sending us some referrals. It was really casual, and we were still working W-2 at that time. We got up to about 25 or 30 properties, just kind of casually doing it that way between our own and others that we managed, and 5 arbitrages at the time. And we went to STR WealthCon, which Bill Faith and Mike Sjogren put on, and it blew our minds, right? We were totally unaware of what could be within the industry and how systematized we could make it and how to build it out. And when we had that epiphany, we actually pretty quickly after that, we picked a date where we were going to quit our W-2 jobs and go for this thing full time. And so the nice thing about having a partner is you can hold each other accountable, put that date in place, drive towards that date, and then make it happen together. It's not easy to quit your job and go out on a limb. So it's nice to have somebody to do it with.
Yeah, and you were probably making good money in tech, right?
Yeah, we both had good jobs, right? So to give up the security of, he was an engineer, I was in sales, and we both had good jobs. And that's the tricky part is, you really get comfortable within that. You get the health insurance, you get the 401k, you get the matches, you get the health savings account, and all these other ways that you can and then you get stock options, things like that too. So they really they do a good job of making it painful to leave, we'll put it that way. And so we really had to say, okay, if we're going to go do this, we're out on our own. We have to figure out health insurance, which wasn't as hard as I thought it would be. You just got to do the research. We got to figure out, how we're going to pay the bills. We're going to be negative cash flow for a period of time. We need to save up and have a emergency fund built up that will give us the runway to be able to make this thing work. And it took about a year and a half. It took longer than we expected to be able to actually start paying ourselves out of the business. And that was because we just wanted to keep putting it back into the business and let it grow.
Yeah. Yeah, it's tough. And I think you realize how much you probably save a lot more money in taxes instead, and it kind of just evens out, with the health insurance and that kind of stuff. So where do you guys manage properties at right now?
The big base of operations is here in San Diego. We, when we started, we were buying properties in Nashville, then we bought some in Phoenix, Scottsdale, and then we live in San Diego. So we had some here, and we were spread out. And what we realized is we couldn't get to the level of quality that we really wanted to get to by being spread out in all these other areas. And really what we learned over time, and Austin's helped us out with this as well, is if you have a bigger base of operations in one location, then you can have a good combination of virtual help and on-site help. And the combo of those two is really what gives you a really high quality service. And you can get up to the best operator in the market. If you're just trying to do everything virtually, it's hard to get up to that level of quality that we now are kind of demanding of ourselves. So that's why we're focusing all of our marketing efforts, all of our growth is focused in San Diego. We did a couple of acquisitions, which I'm happy to talk about last year, actually about 1 year ago today, was a major shift in our business, in our mindset around the business. When we did our first acquisition was November 1st, 2024. And then we did another one January 1st, 2025. That totally transformed our view on the business and how we could scale it and grow it. And yeah, it was a big epiphany for us. That's when we started paying ourselves after we did that.
Yeah. Is there a lot of regulations in San Diego? Or is it San Diego City, San Diego?
It's a pretty, I mean, it's interesting. There's light regulations here in some ways, but they did put a cap on the permits. So, as far as the volume of permits and the fact that there's going to be a cap on the permits, once that cap is reached, then the city is out of commission, right? It's done. Mm-hmm. Now you're on a wait list. So I think whenever you're looking at different cities to invest, that's got to be a major determination. Nashville was very strict about how that was going to work, and we had to make sure we researched it closely. San Diego is the same way. They're pretty laid back about once you're up and running and have the permit, you're good to go. But to get the permit, you're either in or you're out. And for now, there's still about 1,000 permits left. And once those permits are gone, then you can only really be on the wait list or pick up clients from that already have permits, if that makes sense.
Right. I was just wondering how that is. I mean, I have family that lives out there. I visit a lot. My cousin has a house in Ramona. My brother-in-law lives in Hamal.
If you're if right now is a great time, right? Because there's still permits left. So if you're an investor and you're looking for a great place, San Diego is the best, most consistent market we've been involved with. And we've been in Orlando, we've been in Nashville, we've been in Wisconsin, we've been in Phoenix, and we're in Hawaii as well. San Diego is the most consistent one throughout COVID and after COVID. So it's a great market to invest in. And it's a great time because once the permit cap is reached, now demand goes up and supply stays the same, which is ideal for anyone who has a permit.
Yeah, they have some nice rentals over there.
Yeah.
Right on the beach. And I can't remember that beach, the one with the you just walk right down and it has like a whole little road with all the shops and those nice little rentals. I don't I want to say Coronado, but I'm wrong. I always say that.
That's a nice area there.
So tell us about your first acquisition. What did it involve? How many contracts did you guys acquire? And tell us.
So just talking about the acquisition strategy, there were a few things I didn't even realize. And a good friend of ours, Patrick Switek, really helped us out with the whole process. He had done a couple of them and kind of showed us the light on it and helped us throughout the entire process. What I didn't realize even going into it is how much I would learn in the process of underwriting these deals. I probably looked at 20 to 30 companies all around the country. I wasn't really specific at the start. 20 to 30 companies. The beauty of it is that they're trying to sell their business, right? So they're very happy to share all their financials, their P&L statements, all their contracts, what their contracts look like, what the percentages look like. So I was able to learn from all these other companies that were doing what we were doing and figure out how are they handling their expenses? How are they? What does their income look like? Where are their profit margins coming from? And we improved our business without even doing an acquisition. So there was unexpected learning and improvements that happened there. And then the other thing was, what I didn't expect is the way that we structured those. I'll talk about that in a second. But the acquisitions, we wanted to, the reason why we went through with them is because we were struggling to get new clients, right? After the interest rates skyrocketed, there were a lot of the market cooled off. We weren't seeing a lot of buyers coming in, and that's where a lot of our leads were coming from, was new buyers. So we really were struggling to get new clients in, which is why it took so long for us to get ourselves paid, right, coming out of this. So I said, okay, why don't I spend some time looking for and underwriting potential acquisitions where we can potentially pick up 10, 15, 20, 30 contracts at once instead of trying to go one by one and selling each client individually. So while my business partner, Craig, focused on the direct outreach strategies one by one, I focused on the acquisitions and underwriting those deals. We were both working at the same time on solve that bottleneck that we had in the sales process. When we found that first deal, it was in Hawaii. It was 18 contracts out in Hawaii. It was on the market for sale. It was a small portion of a much larger company who's a leader in the industry. What was cool about that opportunity was that when we were selected for it and started going through the due diligence process and the transition process and preparing to take over, we got a lot of face time with the owners of that company who managed 300 properties, right? So for us managing 30 at the time, to be able to have that much one-on-one time with the owners of companies that had been around for over a decade, right, with 300 properties, we really got a lot of advice from them and support from them on, hey, here's how this transition should work. Here's what it should look like. Here's what you need to be keeping an eye on. And we just followed those steps. So that was really helpful as well. And they seller financed the deal. Both deals were seller financed. So I really liked the seller finance model. We didn't really want to go SBA. And the beauty of those deals is that the sellers are equally as invested in our success, right? They're going to do everything they can to help us transition those clients in a smooth way, make sure that their communication is timed up with our communication, make sure that they have all the data that we need to transfer owners and transfer guests and make it as smooth as possible. So that first deal was seller financed. The second one was seller financed. And we were able to take ourselves from 30 properties, around 30, to about 50 in the first acquisition, and from 50 to about 65 with the second acquisition being about 15 contracts. So very quickly, we were able to double the size of the company. There were a lot of growing pains. It was an intense amount of work to make that a smooth transition. So I won't downplay how much work that was. But on the back side of it, we now had enough margin, even with the loans that we had to pay on those acquisitions. We still had enough extra margin where we could pay ourselves and look to hire full-time staff for the first time, full-time US-based staff for the first time.
Yeah. Awesome. Well, you mentioned Patrick. He was on like 2 or 3 episodes ago, and we did a whole thing on mergers and acquisitions, and it was really good. It was super valuable, especially for somebody that's looking to do something like that here in the near future. So, shout out to him. And my question is like, so when you were going after, when you were targeting these, you're creating your lead list of like the ones you want to reach out to. How are you finding these leads? Is this like on Biz Buy Sell? Like, are these you're mentioning people that are already listed their management company for sale? Is that what it is?
The first one was listed with a broker, and that was C2G Advisors. Dylan Burgess, awesome. I love those guys. They were great. They were representing the sellers, but they were very helpful to us as well, even though the representation was to the sellers. So I really enjoy working with those guys. Can't recommend them more. Just if you're interested in this strategy, just reach out to C2G. And so 2 things I did. Reach out to C2G. They send me anything that they have coming down the pipeline or anything for sale, and then I can decide whether I want to put an LOI on it or not. The second way is, like you said, Biz Buy Sell. Just create an auto notification for any companies, Airbnb management companies or vacation rental property management companies that are going out for sale. And you can narrow it down to your market if you want to. But those are easy ways where you can see what's hitting the market, as well as joining Patrick's Facebook group where they're doing buying and selling within that group.
Can you spell you said CDG?
C2, the number 2, G.
Yep. C2G.
C2G Advisors. I don't know what that actually stands for. That's a good question.
And they do like valuations and stuff too, right?
Yes.
Is that right?
Yep.
I got the right people. Okay. I think I know who you're talking about.
So they'll actually help you. They'll help you evaluate and solidify your business if you're thinking about going to sell your business. They will actually help you, give you an evaluation and tell you how to improve the value of your contracts and your business overall.
So Matt, let me tell you what I'm doing. Let me. I want to see what you think about the process that I'm doing here.
Cool.
So for us, we're in a similar boat. We're actively looking to do something like this. I mean, we're also building out a marketing campaign where we're adding the onesie twosie properties that fit our buy box and reaching out to those people as well. But we've started would say over the last couple months, I've gotten really juiced up on this after talking to you on our manager call and talking to Patrick, and I was like, this is so doable. And what I've been doing is I've just been leveraging AirDNA, and I've been using their new property manager tool, and I'm going
Yep.
in, I'm putting below, for the first one we want to do, it's like we want to just kind of, I would say do a layup because these are kind of a gym and hard to find in themselves, just getting something going. I've noticed, number one, that these business owners are much more open to having these conversations. I'm getting a very good response rate. But long story short, I'm using AirDNA, using the manager tab, 24 listings and below, clicking the
Mhm.
luxury, and then I'm just going through managers and then figuring out their website and kind of creating a list, DMing them. And it's more of like what I'm looking for is almost like off market, but it's more of like maybe operators that are exhausted, where they've reached that
Yep.
level where, okay, at 20 listings, you're past the point of DIYing it and you need to build out an actual business. So they're at that
Mhm.
threshold where it's like, hey, are you really in? Or do you have a bunch of contracts and I can alleviate some of your pain and give you an option that maybe, private equity, these people way up there, you wouldn't even be remotely close to their radar.
Yep.
So like the middle fish like us at 60-ish listings, this is an attractive opportunity. So am I in the right realm of approaching this, or any
Yeah.
critiques on this? What's your take?
No, no, I think you're thinking about it the exact right way. That's how we were thinking about it. For that first one was on the market, the second one was off market, and that's exactly what I did. I did it manually because the property management tab in AirDNA wasn't built out yet. They didn't have that last year, and I just went down. Even with ChatGPT, whatever that that's another great way to do it if you use the agents. And essentially, you're just creating a list, like you said. Here's the property managers. That to your point, I was also looking for those about 20 units and below because I know that there's a lot of people out there that are in that 20, 15, 20 range that can do it all themselves. They're doing the guest communication, they're doing the vendor coordination, they're doing all the owner communication and account management, they're doing all the contracts, they're doing everything themselves. And that's about the max of what you can do on your own. You can, sure, if you're really hustling and you want to work hard and all days, all times of the night, then you could probably push up to 25, 30, 35, 40. But you end up in this position where I don't, that's not fun, right? You're the one who's got to answer all the negative situations. And that's usually what we deal with as property managers. The guests that are having a great time usually don't reach out. They have a great time and they check out, they leave us a 5-star review. It's the ones that are having trouble or issues or can't get in at 3 a.m. or there's a fight or something like that. That's what we have to deal with. And that can be exhausting if you're trying to do it all yourselves. So I also think there's a lot of people out there that are doing it as a side gig from their main gig. And realtors specifically, I think a lot of people got into that during COVID, or to say, hey, I'm selling a lot of these properties. Why am I referring these out? Why don't I just do the management myself, get a few $1,000s in passive income coming in? Because as a realtor, you don't get a salary, right? It's commission only. So that's how we bought that second one. I went down the list. I did the same thing you did. Cold called them, the companies, and I just said, "Hey, this is who I am. I'm also local. We're looking to grow through acquisition. Would love to chat. Let me know if you're open to the conversation." And I just straight into the point. I had several conversations with people that were not interested in selling, but just happy to chat anyway with another business owner doing something locally. So I made some friends, made some good connections. I reached out to probably 40 or 50 companies in San Diego, and one of those hit. And her partner were looking to move on to other things and had been approached by a few other people for an acquisition, but we had just done one. So we already had the contracts. We took the lead on, they didn't have to get a lawyer. We took the lead on everything. We knew exactly what it needed to do to transition over from one to the other. So we were ready to go. We were all packaged up, and we made it really easy for them.
That's awesome. Yeah, I've noticed that too. I've noticed a lot of realtors are doing it as well. And, just like anything, like any other operator, some good, some bad, but just vacation managers themselves, there's some good, some bad. But I've noticed that, and then they maybe get into it and they realize like, hey, this is a lot more difficult. There's a lot more involved. and maybe, oh, well, I can hold on to this listing for 3 or 4 or 5 years and then I can help them sell or buy another one. I mean, I kind of get that mentality, but one thing I wanted to say is like, I think another reason, if you're like, to your point exactly how you got into other markets, it's easier to get into another market instead of adding like one, two, three, four, five, six, and trying to build a reputation and build it up. If you're interested in getting to another market, it's almost like, hey man, like if we can go into another market that would make sense, we need to start making money there. Like, can we get 10 or 15 off the
Mhm.
bat, figure that out, pay those off, and then, now we can grow in that market, but we actually have infrastructure to grow versus like I'll grab one house and one cleaner. It's just I
Mhm.
just feel like it's you should do that, but it's also like it's so much friction and it's so much harder to go that route.
Yeah.
Um,
Yeah, it's way harder for sales, right? If you're trying to sell a new contract and you have nothing in the market or one other in the market, it's going to be really tough to compete against those that have 20, 30, 50, 100 because they're going to have so much more systems built out. So 100%, like let's say hypothetically San Diego, the permit cap is reached and we can no longer be quite as flexible with picking up new properties in San Diego. We may pull back on all the marketing spend in San Diego and decide, okay, what's another good market? Okay, let's go and look to do an acquisition and see where we can get a good deal on an acquisition, move into that market, put our marketing spend there, and continue growing there. But yeah, 100% I agree. We've tried to go into markets just cold one at a time, and it's way more difficult than if I can buy a package of 10 or 15. And maybe that already comes with a handyman. Maybe it already comes with a VA, like the acquisition we did. And so you already have a structure and a consistent quality that you're buying into.
Yeah. What do you think about, and maybe you don't know the answer to this question, but what do you think about like if you do have infrastructure in like say 4 or 5 markets, but you're spread out across the United States, right? So like that might be you kind of, for example. What do you think that does to your, have you looked at this? Like what does it do to your business valuation? Is it some people are forced to be more profitable, they need to go into another market versus Patrick, his method, where he's 100 plus listings centralized in one area, I guess. So, what do you think about kind of like diversifying into different markets and maybe how that affects the valuation if you're building a business to sell, right? Does that kind of make sense?
Yeah, for sure. I mean, what we've realized is that there's a ton of benefits to be in one market. Now, there's some cons of that too. If you're only in one market and regulation changes, which San Diego has a bill going through or a push right now, that they might put a $5,000 tax per room per year on every vacation rental. So a 4 bedroom would have 20,000 more per year to pay. I mean, if that goes through, that's going to be almost the most restrictive rules in the entire country. So things like that can come up, and if you're solely in one market, then you really have a lot of risk there. So there's pros and cons to both. I would say the reason why we like it is because, like I said, you can get your operations to a point with maintenance, with inspectors, post clean inspectors. You have a certain volume that you can negotiate your contracts. You can negotiate with other vendors, whether it's pool maintenance, landscaping, cleaning is a huge one, right? So running the business is easier and more profitable when you're located in one place as opposed to spread out. And then from a business valuation standpoint, I think the same thing, right? That if you're spread out all over the place, it's a really complex business to be running. You have, instead of one set of cleaners, you have 10 sets of cleaners that you have to maintain and vet out and prove, make sure the quality is good. Same thing with maintenance. Those are the two big areas of the business. So we still operate in multiple markets, but I will say that the quality is not as good in those other markets as it is in San Diego, where we have the hub. And I think that does make you more attractive too for an acquisition. If you're mainly in one location, then somebody who may be looking to do an acquisition can move in really quickly into our market.
Yeah, I think it's also situation dependent, right? Like every situation is different. So like for you, that might have made sense. And then for somebody that is, like let's just say in, Joshua Tree where they could just dominate the area, be a good manager, make money year round, maybe a more seasonal market too, like and not a beach market, right? So I think there's a lot that goes into that. and it's kind of situation dependent.
Well, I think there's
So
something to be
what?
said too, like
Okay.
one other pro of being spread out a little bit. For instance, we have our low, every market is somewhat seasonal. When San Diego is in low season, right now you're in a bit of a cash flow crunch as a business owner. But we bought and we own a lot of management contracts out in Hawaii. Their high season is when our low season is, right? And same thing with Phoenix, those ones in Phoenix and Scottsdale. Their high season is different from the rest of these markets. So it does even things out a bit where your cash flow is not crashing in low season when you have another market that has an opposite seasonality.
Yeah, I think that's something we're battling actually is just having a summer seasonality business in both of the markets that we're in. So navigating that and trying to figure out, okay, well, should we entertain a mountain market or something like that? And if we did, how many, who would we look for? So I don't know, but those are questions to answer as we go.
Yeah.
Um,
One other thing I'll say about the acquisitions that I didn't realize going into it, and I was that the way that these contracts typically work, and when you're taking over, it's an asset purchase agreement. You're purchasing the assets. The assets are the contracts, maybe the online profiles on VRBO or Airbnb or Booking.com, the list of guests, right? The guest list, the past guest list, maybe the website, depending on whether they're closing down shop or not. That's what you're actually purchasing, and that's what you're paying for. What we didn't anticipate and actually ended up being a nice bonus for us was that in those contracts you have a contingency, right? We don't know your owners, you know your owners. We can take your word for it, right? But we don't know what the current relationship is, and we need to put in some contingency that if contracts are leaving, if owners are leaving right after the transition within a specific time period, then that's on you, that's not on us, right? So that really keeps our interests aligned. We need you to help us with the transition. And what ended up happening that I didn't expect is that the owners, some of the properties that were struggling, like the properties themselves, were in rough shape, and weren't up to our standards, or the owners were kind of high maintenance, right, and needed a lot of hand holding. They didn't like that they were out of control with the transition. They didn't like that they didn't get to choose us necessarily as much as we were sharing, and talking to them about the transition. So what ended up happening is the higher maintenance owners dropped off pretty quickly, and then we get credit back for those contracts. So we end up with the good properties and the good owners, and we didn't have to pay for the bad ones. That
yeah,
was unexpected, and that was a huge bonus because it just naturally weeded out the high maintenance owners.
it created a situation where at the end of the year next year you didn't have to go back and pumpkin plan those owners anyways because they
Yeah.
eliminated themselves during the process and I identified their red flags at that point. So you just kind of were like, that's a very interesting take. I never thought about it that way. And then I was wondering, like, for my next question is like, what does it look like whether on your acquisition whether the contracts were assignable, not assignable? Like, are you purchasing this management company that do you have to go back and like resell yourself and have them sign a contract with you, making their business
Yep.
less valuable, I would think, because you can't just assume their business. What did it look
Yep.
like? Were the contracts of the companies you manage like airtight to where it's like, hey, we can take over and they for the most part kind of have to work with us for at least the first year? Or how does that kind of work?
Mhm.
Does that make sense?
Yeah, yeah, that's a great question. So both acquisitions, most of those contracts were assignable. There were two contracts on the second acquisition, two or three that weren't assignable, and we ended up signing them, right? But we did have to resell them. It was like a full new sales process for those clients to get them on board. Um, but yeah, like if you're thinking about, hey, is whether you're looking to do an acquisition or potentially get your company into a place where you could be acquired, the two things that I would say with your contracts are make sure you have the assignability clause that does not require permission from the owner, which if the owner wants to negotiate it in, fine. Just realize that you're going to have to do more convincing on them on a sale. The second thing is annual contracts. We used to do 60-day out clauses on our contracts. Now every single one is annual unless it's negotiated down, right? And very few people actually negotiate that. A majority of them are happy with the annual contract. So once again, the whole process changed our mindset on how we do our contracts, and I totally rewrote our contracts after realizing what was valuable about them. So I added the assignability clauses. I went to annual renewal contracts, and that's making our contracts more valuable now as well.
That's what I was going to ask you, like what contract length you're looking for. Um, so any annual or better, right? If
Yeah,
not better.
for sure. I mean, the second acquisition we did, most of those were month to month or 60-day out clauses. And for that reason, the value was lower, right? The value per contract was lower because they could drop off. And we also needed to do a longer contingency period for that exact reason because they could drop almost at any point. The first acquisition, they had annual renewals. So we knew when we had to make sure that each client was happy by this time frame, otherwise they could potentially leave us, but they could only leave once a year, right? So it's a lot more valuable to be able to have you have a runway of 3 or 4 or 5 months to get them up and running and get them happy before that renewal opportunity pops up for them.
The last two contracts I locked them in for 2 years.
Mm-hmm.
So I don't know if that's too long or not. I kind of just anchored them out, like basically like I'll charge an onboarding fee, right? But if you don't want to pay that up front, you can sign for 2 years type deal.
Yeah.
So I didn't know if
I think that's great.
Okay, that might have seemed kind of bad.
No, I think that's great. I mean, the longer the better, and it's all like to your point. It's all a negotiation on where you have some gives or some gets that you can get in your contracts. You know where they're at, and it's just a negotiation with each client.
Yeah. Okay. What is so like if like for instance, like say me and Austin we're both looking to acquire a company, like what are like the 5 top things that we should look for when we're going, or maybe the top 5 things we should ask? Let's just say I go on a biz buy sell right now and I find a company with, whatever. And I'm like, okay, let me just send them an email and ask them these questions. What top 5 things should I ask them to get the ball rolling?
Yeah. I mean,
might be beneficial to make a decision.
For me, it's financials. That's the first thing, right? I just want to see what their financials are. So many people just have especially if they're on the market, they have a purchase price, right? And some of them are totally unrealistic, and some of them are realistic in the right range. And the first thing I'm going to ask for is the financials because, like I said, I learn a lot from those financials. So regardless of whether I'm even interested or not, I want the financials so I can learn what are their income sources, what are their expenses, how does that P&L statement look, and what can I learn from it. So that's always the thing I'm most interested in, and I love looking at those numbers and comparing it to our company and seeing how we can do things better. The other things that we looked for with both of these companies that made us excited for them, the opportunity, was we're looking at their public profile, we're looking at their listings, we're looking at the Airbnb profiles, the VRBO profiles, we're looking at the photos, the actual marketing on the listings. And in both cases, we thought we had a good amount of opportunity to improve the marketing right away from day one. And what that does is that, number one, we think that if we can improve the marketing, we're going to raise the rank, we're going to increase our SEO, we're going to be able to get more revenue for those owners. And then we also realized with both of those companies that they weren't as optimized for Airbnb as we are. They were more optimized for VRBO. And so we saw opportunity there to optimize across the platforms and also improve the photos. So right away, first thing we did coming in, getting introduced to these owners, we said, hey, we're going to reshoot the photos at your place at no cost to you. Right away. That was one of the first things we did. We're going to give you we're gonna take this expense on ourselves because we think it's going to be a huge help for you, and we expect you to be more successful because of it. That's a great way to introduce yourselves to the new owners and really give them excitement to say, "Oh, cool! These guys are coming in with ideas on what they can do and how they can improve." That was really helpful in those first conversations.
Yeah, I think the ones that I'm going after is like, okay, would we manage most of these properties? Yes, we would. But you can tell, like, okay, it's 10 to 15 listings. they aren't using dynamic pricing or something like that. And then
Yep.
the properties look good, but the photos are really bad. So it's like
Yep.
those same things you're looking at when you're adding like onesie twosie properties is the same thing you transfer over when you're looking at the manager. At least for the ones that I'm looking at as potential prospects. And it's like, okay, well, if we just did professional photos and added dynamic pricing, that already is going to increase the value of those contracts. So
Yep.
yeah, I like that.
Yeah.
And
100%.
then Matt,
And
do you have another one or?
Um, well, I was just curious on like what to look for. I feel like, I mean, you say it's like easier to just acquire like whatever, like 50 at a time or 20 at a time than to like get one. But I feel like there's just so many moving parts. And it's like, I'm not thinking that way, but now like I've talked to you, I've talked to Patrick, Austin's trying to do it. So then I'm like, okay, well, maybe I do acquire somebody, right? But now I'm like thinking like, well, fuck, how many different, you know what I mean? How many different things do I have to think about when it comes to doing that?
yeah.
And I'm just trying to simplify it for everybody as well. If there's other people that are out there
Yeah.
trying to think about it, like, you know, more like an onboarding, I guess, type deal,
Yeah.
onboarding a unit or something like that.
Let's talk about it a
So,
little bit. I think that's a really good point because the reason why we were confident and comfortable doing this is because we felt solid in our operations, right? We felt solid. We felt like we can double the company in size. It'll stretch the team, but we have the team. We have the team of VAs. We have ourselves. We think we can do this because operationally we were ready. Sales wise and in marketing, we were struggling to get leads in. So we actually had to let go of two of our VAs because we weren't growing as fast as we wanted to. So we actually had over prepped for operations in anticipation of growth, and then the growth didn't come. So, so I think that's important to make sure that your team is solid, that you're confident in the current operations where you're at right now, before you go and double the size of the company, right? Or add 40% or 50% more to the company. Now, in the transition, you think about like, it seems like a lot, right? But you think about, okay, most important thing, I need to have open and clear line of communication with all of these new owners. That means I need to have a very clear line of communication passover from the current operators to us, introducing ourselves, and immediately try to jump on a phone call with all those new owners, and then set a very clear cadence of here's what we're going to do, here's our plan, here's our strategy, and we're going to stay in touch with you at this pace on this regular basis. Whether it's you or your director of operations or whoever is doing that, somebody needs to be very in step with those owners. At the same time, your operations team is going to have a whole bunch of guests, right, that are booked. And depending on whether you're taking over their existing profiles or whether you're going to create new ones, which in both cases, we created all new listings because we needed new photos. We needed to get rid of the reviews and start fresh because they weren't the best reviews there as well. So we started fresh on everything. That meant we had to have a list of all future guests that were booked. And then our team was tasked to reach out to every one of those guests. We sent emails to them. Here's the new link. We had to create the new booking links. Here's the new link. We'll honor your same pricing. Reach out to us or give us a call. And so we had a lot of flurry of rebookings and calls, inbound calls coming in from those guests, especially in the first acquisition. That's really the busiest part, making sure the owners are transitioned properly, making sure the guests are transitioned properly. Everything else is kind of what you guys are already doing, right? You get the listings up and running. That's not that heavy of a lift. You get the pricing up and running. That's not a huge lift. I mean, the dynamic pricing is some effort that goes into that. But those two things were the biggest lift, I would say. And hopefully that helps to kind of narrow down the idea of how much work it is to do it. You just got to be really tight on the owners and the guests, and then you're back to normal.
Yeah. And I think any way, no matter who you talk to when you start having these conversations, everyone's going to have a different setup, a different structure, whether you can use their pictures or you got to reshoot the pictures. Do they have assignable contracts? Do you have to sell these people like, and that's the thing that was a common thing that we talked about with Patrick. And I was asking him these very like strict questions. And he was like, dude, you don't know how it's going to go. You just have to have the conversation and just keep solving the problems along the way. And every acquisition that he's done was different, structured differently, different results
Yep.
came from it. So I think that's kind of the main thing. One thing I want to hammer home, and I know this is called the Co-host Bros podcast, is I think all this kind of highlights if you're in a market that you could be a property manager, you have the credentials, you need to figure out how you could be a property manager and not a co-host, right? I think there's no value in being a co-host. If you don't own the listings, you don't own the bank accounts, you don't have assignable contracts, you don't have a business, right?
Yep.
So that's the main thing. And I think and you don't know what you don't know, because I started out co-hosting and I co-hosted 10 to 15 properties. And that's when I realized, dude, you just created a second job for yourself and you're a service guy.
Yep.
But you can't, I don't know. I mean, can you sell a co-hosting business? I don't think so. Not if you don't own the bank accounts, don't own the listings. I mean, maybe you could, but like, what is it actually worth is the question. Maybe.
Yeah. Yeah,
you're probably selling at a third of the price. I mean,
yeah, you have no control. You have no control, and I think that's the trick. As a co-host, I mean, I shouldn't. I know some operators that operate as co-hosts at the scale of 100 and 150 properties, right? And they're co-hosts on all of those listings. I know Patrick does that quite a bit. I don't know if he's moved away from it completely. I have another friend in Pittsburgh that does that as well, and that model works great for him. In my opinion, to your point, I need to have, in order for me to run a successful business and scale it, I need to have the funds in my account so that I can make sure that all the vendors are being paid, all the expenses are coming out of the income, and the leftover is being passed to the owners. If I'm having to sit here and have to chase accounts receivable every single month and try to chase down all these owners that owe me money while I'm taking on hundreds of thousands of dollars in expenses, it's just not a recipe for a cash flow positive business. It's going to put you in a cash flow crunch at some point, and that can kill your business. I mean, many very good, healthy businesses die because they run out of cash flow, and nobody can fill the bank accounts, right? So by having the income coming in the trust accounts, we have more responsibility, but we also have a actual business. We are able to get lendings and lines of credit from all of our banks and our partners. And those lines of credit are what we use to buy and acquire these businesses. We didn't take our own money, or we didn't use our own cash out of the accounts. We took lines of credit based on the business income and the flow of money coming in and out. They gave us lines of credit. We use that to do the acquisitions. And now we've paid that off as soon as we can and get back to, a place where we don't have the debt.
Yeah, I think especially if you own everything and you own the bank accounts, you also own the profit. There's more profit to be made. There's more things that you can make more money on, such as upsells and things like that. I think that if you just co-host, I mean, co-hosting is great. I mean, I think it's great to start. I think most people who end up co-hosting end up moving to property management. Like you were saying, like, yeah, I got a friend of mine who's in Houston. He's got like 80 listings, and we were talking about him moving over to trust accounting, and he's like, yeah, he's like, it's just hard. He's like, because he owns the listings, because he co-hosts them. He doesn't collect the funds. Like, it's weird. So he's trying to convert all these things, but it's like, if you're going to do something, you guys should do it sooner rather than later, like, I mean, and what you said about the accounts receivable, it's just funny. And I always go back to this because when I started doing property management straight up, but I always go back to, like, one day I was having a conversation with Austin when he was co-hosting, and he told me how much money he was chasing to pay his credit card, because he paid all these people.
That's stressful.
And I just thought in my head, like, fuck, dude, I don't want that stress. Like, I don't want to be like, well, I'm pissed off when the owner actually owes me some money. I don't want to, I just bought an arcade for one of the owners, and I was like, yeah, it's cool, whatever. But it's like, I'm like, I'm giving you interest-free loan. Like, It's interest-free for me too. But it's like, I couldn't imagine. Like, I couldn't imagine having $100,000 sitting out there waiting for someone to pay you.
Yep. It'd be stressful. I mean, to what you guys said, somebody who's looking to get started or has, someone who's looking to jump in and say, hey, I have a W-2, I'm interested in this. Obviously, there's a ton of people. That's probably the vast majority of people in the industry are somebody who's just getting started or has under 5 or 10, is trying to work their way up to it. We were all there. All three of us were there at some point, not that long ago, right? So, I mean, if there's any advice I can give, it's like, whatever you can do to get started. Co-hosting is such a great way, whether it's a family friend or a friend of yours. family member, go to, if you don't have any that have properties that you can co-host on, go to a real estate meetup, go make some friends, go find somebody like us. If somebody came to me and said, I'm looking to get started, I would love to get started, is it okay if I co-host on one of your listings? I'd be like, sure, of course, I'm happy to help. Just don't respond to any guests, don't do anything, but you can co-host and you can see how I run the business. You can see what happens behind the scenes, how we handle guest situations. I'm happy to do that for somebody new because other people help me out the same way. So co-hosting can be a great way to get into it, get a little bit of income coming in, work with those homeowners, learn how to do the account management, learn how to do the finances, learn how the industry works and how to handle guest situations, and then go take that and convert them into property management or use them as references to go get your first true property management clients, right? You got to have some references, some people that'll vouch for you and know that you know what you're doing in order to then get to get the next ones coming in. And I would also say, if you're just getting started, don't be afraid to just do it for free. Don't charge anybody anything. You don't know what you're doing. You don't have the experience. So go and help somebody out for free, or even put some of your own money in to help them out. And that person will become your biggest advocate ever. If you're putting your money in and charging them nothing and helping them out, it's a really good way to get a really referenceable client who's going to sell your next client for you. That makes sense.
Yeah, it's all about reps. Like, I mean, if you don't know what you're doing, I mean, it's funny because like shitty things will happen, and I'll be like, "Damn it, now you got to deal with that." And then my wife will be like, "Another thing to learn or to figure out," and you'll know next time it happens. And I'm like, "Okay, whatever." Like, it's fine. I mean, but it's true though, because it's like, and it's the same with like any job you have. It's nobody, you don't go in and just know exactly 100% what to do. Like on the job experience is there, and that helps you be able to answer the questions when you're going to try to get the owners to sign and all those kinds of things. So it's like, and the fact that you just said that you would do that, you better watch your Instagram.
I'm happy to help, man. If somebody wants to help and is really trying to figure it out and get in, let me know. We can find some way. I mean, the other thing too is, like, where was I going with that? Yeah, I mean, going to meetups is probably one of the best thing. Meetups, and then also getting in groups of other people. Like, we do a meetup here in San Diego for Airbnb and hotel investors, right? People can come together. It's free. You show up and everyone's sharing ideas. And we have people there that are big time investors in commercial real estate and brand newbies that just bought their first place. And it's awesome because I'm more than happy to help. Everyone else there is. That's why we're there. Everyone's helping each other out. And I love that that's the vibe of the real estate investing community, is that everyone is learning from other people, learning new things, sharing ideas, and then helping those that are just getting started. I had so many people that were experienced that I was so surprised that they wanted to even help me. And they did without no questions asked, showed me everything. And then what's funny is when I became a specialist in this area and I became really good on it, all of those older investors started coming forward to me and saying, hey, you guys are killing it here. I've got these properties, but I'm far beyond the point of managing them. So why don't you manage for me? And then, those older investors that were like, hey, I like this model. I think I've got a property for you here. So I think that was great too, is by getting really focused in on one area, whatever that strategy is, you start to get opportunities that come to you because you became the go-to person in that meetup or in that group or whatever it is.
Yeah,
that's awesome.
That's awesome. I think like another thing with our space is like it truly is like an industry where the barrier to entry is so low. Like you don't really it doesn't cost you money to do this. I would say that a lot of people get into it, but I also see a lot of people fall out of it when they realize how difficult, stressful, and how hard the actual hospitality industry is. So there's a low barrier to entry, but there's a high failure rate, I think, especially the people that want to scale and build something serious. But one thing I think, well, no, I don't think, one thing we all three have in common on the show is that this is what I would encourage people to do first is if you have a W-2 job and you have the ability to do this, you should be an investor first. You should learn how to analyze deals, even if it's a property that is like, if you can't afford a super property, right? Buy something 200,000, 300,000, figure out the reps, do it on your own first. Because for me, that's what I did. And then like you guys did, we started doing that first. And it's easier to sell people when you say, hey, I have a house in the market and I manage as well. But I have skin in the game because my success is also dictated on my own property. So if anything, I would say if you have the opportunity, the best way to get into this is like just become an investor yourself, and then people will trust you because you're an owner as well. And I also
Yeah.
like the point that you hit on of like taking a lower percentage. The first client I signed, I sent them an agreement. They said, I said, 20%, whatever. And they were like, well, we want 15. And I was like, I don't have a client. So I'm like, I will do it for 15. So you can lower your standards on the first one. But to Matt's point, like when you're getting going, you just need that first one because it's your practice property anyway. So if you can get a discounted, commission and you can get paid on it, that's a win in itself for your first property. And, sounds shitty to say this, but you can drop that property later as you build and go later on down the road. So I like how you mentioned that. And yeah, I don't know.
Yeah, it's been a fun journey. I mean, it's fun to think back to those first few that we picked up and how we hustled for them. And it's definitely easier now to pick up individual clients because we have a good portfolio of them. But if you're just getting started, you have to think about what are your strengths and how are you going to sell yourself to beat out the bigger managers. Well, as you're getting started, the fact that it's you and only you and everything is you from the start to finish is a huge differentiator. It's a huge benefit to a lot of people. They want to know they can call you day or night. They want to know you're available. They want to know that it's you that's going to go and check on the property. And you have the ability to do that when you're first starting. So that's a big advantage over the bigger, even a company like mine, right? Is that you can say, it's me, I'm doing it. To that point, I would say there's advantages at each step along the way of where your company is. You just need to think about how to present those to get those clients and get them excited about working with you versus somebody else. But what I would say is, I mean, a lot of times we're not even competing head to head, right? If we have the relationship with the realtor, or if we went to the meetup and created those relationships, they're not going to anybody else. They're coming to us because we created the relationship. I don't have to compete. I don't even have to sell myself. They just see what I'm doing and they say, great, I got another one for you. Let's do it.
Yeah, and I think you should also like connect with other managers that are bigger than you, way farther along as you're just getting started. Just befriend them, figure out that works. I mean, you don't have to have to take that competitive approach. Like just befriend them because there's a guy, he also listens to the show. His name's Scott. He's in our market, and his main goal is literally to get out of his W-2 job. And we say no to 90% of properties that call in for the most part. So I'm just like, he's my buddy. I just keep sending him to him. Like, dude, your goal is to, like, this will pay you 8,000, 10,000 in commission. We don't want it. But, if you stack 5 to 10 of those, you're out of your W-2 job. So he just kind of befriended me along the way. And I'm like, wow, I like him. He keeps helping me. So I just keep throwing him stuff every time I say no. And it's just a layup for him. And he's going to be out of his, and I hate to say he's collecting scraps because it's not really, but kind of in a way, his mission, his goal at the time is different. So he's just like, and I'm happy to send it to him because I know he's actually really good at what he does. He just doesn't have very many properties. And to your point, when you're smaller like that, you can provide a much more boutique service where you are the Mr. Fix It and do it all. At least in the beginning of stages. So when I keep sending it to him, it's like, dude, this guy's probably going to be out of his W-2 job. He texted me, like beginning January next year. And I'm like, I literally stuff I would have just said no to. And like, I would have just not had somebody, but I just have to call and say, hey, I understand what you're going through. We can't take it because of this, that, the other. This guy's really good and he'll take it. Set up a call with him. And then he's just converting them. And it's like, man, like I didn't do that in the beginning phases per se. But he did, and it's like, well, he's going to be out of his W-2 job in a matter of months just because I'm passing those along to him. So,
wait, he listens to the show?
Yeah, he does. He started listening.
I haven't seen his review.
Yeah, Scott.
Or him sharing the show.
If you got this far, he texts me all the time. He's like, sends me the link, and he's like, I listened to this one. This was really good. But I think it's funny how this episode, like, what do you target it? Like what do you call it? Like we talked about mergers and acquisitions, and then we talked about getting your first property. So we literally covered everything from the whole spectrum of property management.
We'll get it figured out, or I'll get it figured out.
Yeah.
But, I mean, to Austin's point though, like, I mean, if you can afford to buy a property and do it on your property, you'll learn a lot. I mean, I only paid $140,000 for my first property. So I was like, I didn't pay a lot, and it was in 2022. You just have to look and see what you can find. I
You
mean,
guys gonna laugh. Matt, my first one, 55,000.
In what, 2008 or 11 or what?
2018. And
Really?
2018.
San Diego or where?
No, Wisconsin. That's where I'm from.
Really?
A fourplex for 55,000.
55?
Damn.
Crazy.
Well,
So-
shit, it doesn't even matter if it rents. It only needs to rent once a month. It's fine.
There were 2 units that were rented of the 4. The other 2 were vacant. The rent was less than half of what it should have been, and so yeah, we had a lot of work to do when we bought it.
Yeah.
We had a lot of we renovated the units, but that's what 100%. I totally agree with you guys. If this is a route that you want to go, go and like I always advise people, go find something in the middle of the country, somewhere where it's much cheaper, where you can make mistakes, because you're going to make mistakes on your first one. So go find one where even if you make a bunch of mistakes, you're still going to cash flow. And cash flow comes from the center of the country as opposed to the coastlines in most cases. So, and it forces you to figure out how to manage remotely. We immediately got a property manager when we bought those units. So even though we are property managers, we don't manage that type of property. So we respect that they have their expertise there. We handle our expertise in our areas. So yeah, I 100% agree with you on that, Matt.
Yeah. And I can say, like, another point that you bring up, I think that's really good, is when I got started, I was at least 3 hours from my market. And I think that eliminates a lot of tasks for 3 hours there and 3 hours back. To make a 6 hour, to spend your whole day to do something, you really got to go out there for something. And I think I'm biased because that's the way I did it, but it trains your mind to not be the person that's 10 minutes away from their property that can deliver toilet paper because the cleaner forgot to stock them. Like, you can't do that, because if you get that mindset, you're not going to be able to build a business, because you're just going to be the guy that solves all the problems versus finding the who can solve all these problems for you. So almost like a lot of people say, well, I'm scared because that market's far away from me and stuff. Like, lean into that, and you should go to that market because of that reason. So you can figure it out first. And then if you move there later, like I did, then you can move there. But
I remember when you were driving there though all the time too,
but no, here's the thing though.
Yeah.
But the reason I would make the trip is because I needed clients, and I didn't have clients. So if I was driving there, it was to sign somebody, and I knew I was meeting them, and I knew if I got in front of their face, then the chances of me converting that versus a big manager was higher. But to your point, Matt, you make a good point. There was a lot of times that those didn't convert. They never turned it into a short-term rental. XYZ happened. So it was.
But you do it all at one time, though. It just gives you a reason to go and do what you have to do at your house too, right? Because you got to go out there and meet a client. I mean, but yeah, I agree with you, because I used to do that too. Because like my property is like 2 hours away from here, and I used to go there for the stupidest shit. And then I'm just like, and I'm like, okay, call the maintenance guy. Like if it's something big, like finally, like I had a hot water heater problem. We had changed the hot water heater after the hurricane's electric. Well, I guess when we changed the water heater, it had an air bubble in the very top, and it kept burning out that top element. So I kept seeing the maintenance guy. He's like, "Oh, we should rewire it. Oh, this, that. Oh, this, that." Finally, I was like, "All right, it happened again." I was like, "We're gonna go down there. Just like we have to do some stuff anyway." So I went out there. I changed all the elements. I drained the water heater, changed the elements. I filled it up. I let all the air out of it, and everything else. I hasn't had a problem ever since. But I had to go fix it, because I kept going like, "Can you go fix it?" And he kept fixing it, and then it would break again, and over and over and over and over. So it was like there was a special circumstance. But
I thought you were going to say that you went to fix it and did all the work, and then because you didn't have the expertise, you messed it up, it broke again, and then you realized, what the hell is the point of me doing that?
I messed it up originally, though. I didn't mess it up originally. I put the water heater in myself, so I didn't. So after so it is kind of true, yeah. So after I sent the guy like three or four times, and I was like, okay, I'm gonna figure this damn thing out. And I look at YouTube, and it was like, oh, make sure you do this, or water gets trapped in the very top of it, and it can move down to the element. And I'm like, oh fuck. So that's what I did when I changed the elements. And I never had that problem today. So yes, initially it was my fault, 100%. My house got built after a hurricane, and I didn't want to pay the guy like I don't know, he wanted like $2,500 to install
Yep.
electric water heater, and it's downstairs. Like it's literally right there. And I'm like,
Yep.
no, dude, I could do it for 400. Like, no thanks. It's worth me saving that much money.
Yeah.
You know, I'll save $2,100. So it didn't really save me $2,100. It probably ended up costing about $1,800 between their total, or saved probably $1,800, you know, through the trips and all that shit. But
Yeah. Man,
it
if
is
there's
what
one
it
thing
is.
I've learned, it's trust the experts. The fact that they have 20, 30 years of expertise in that area, just, why am I even trying to get in there? Maybe I'll negotiate them against each other. Hell yeah. I mean, I'll get multiple quotes and I'll negotiate them, but I'm choosing the expert that has great reviews. But I just wanted to say, I mean, this whole conversation right here is a great it's a great metaphor for, like, if you want to scale your business beyond that 15 or 20 unit mark where you kind of max out. It's all about this. It's all about letting go of control. And that's probably the hardest thing for people that are entrepreneurial driven mindset. You're probably great at your W-2 job. You get everything done. Your boss is happy. And you take that same mindset into, I'm going to crush it and do it all and do it better than anybody else. The shift in mindset you have to have at some point to break through that ceiling is, I need to be able to trust that other people can do it as good as me, or very close to as good as me, maybe in a different way, but as good. And when we broke through that and we started hiring VAs, right, that was the big thing. When we started hiring the first VAs, we had to train them, right, and they were only as good as we could train them. Once we started realizing, let's go find the team members or VAs that had already been at companies that were 3, 4, 5 times the size of ours, that knew exactly what they were doing, all of a sudden they're coming in and improving our business in all these different areas because they knew how to run it better than we did at scale. And that was a huge epiphany of not only the thought process of, like, nobody can do it as well as me in this area, to, oh, there's people out there that know how to do it way better than me. And the beauty of running a business is that you can hire those people. They don't want to be business owners, but they have a really good set of expertise that makes them better than you in a lot of areas. And that's the beauty of being a business owner, is that you can leverage other people's expertise, make it a win-win for them to be with you, keep them very happy and motivated. And all of a sudden your business explodes because you have the right people in. We're now at 8 full-time team members with my partner and I. That's 10 of us full-time working on the business every day. 5 of those are VAs. 5 of us are, on site on the ground. And man, every day I look forward to having conversations with those team members and enabling them to do better, right, and improve and make their lives easier. And that just becomes a really fun place to be when I no longer have to be doing the day-to-day, and I can just be supporting the rest of them and making sure that I'm keeping them motivated, and that I create a vision that's exciting for everybody.
That's hella smart. I mean, so you're hiring an experienced VA. It might cost you double the price, but what you're going to get back in return, I mean, is
Yep.
probably 100 times. You know, you return on equity on that is probably really good.
Yeah, it's incredible. About twice the price is you're right on point. It's about twice as much. But they're coming in and taking initiatives. They're saying, "Hey, here's how we did it here. I think this is what we should do." And I'm like, "Great, boom, go for it!" Right? I'll pay for that software, and then they set it up, and they've been able to create a system that's so repeatable that we're now so far ahead of issues that were upstream, that we can continue growing at a pace that I never expected us to be able to grow at. And that's where we're at right now, is we're growing as fast as we can possibly grow because the operations is solid, because we brought in people that knew what they were doing.
Yeah. So we have like one VA. There's one VA that I work with specifically on our team, and it's mostly over sales and revenue management related stuff. And he, like, yeah, we pay like double what probably VAs would pay, you know.
Yeah.
Anyways, it's funny, like, just to, like, it gives me so much fulfillment working with him and knowing how much he enjoys what he does. He listens to podcasts in our industry. He does full in-house revenue management, but he listens to revenue management podcasts, and he's like, fired up about just being the best revenue manager that he can be. And then he also helps me with skip tracing. And his words to me the other day is like, I was like, how's everything going? Did you get that list, skip trace, whatever? And he was like, yeah. And I was like, are you enjoying it? And he was like this, oh yeah, it's so fucking satisfying is what he said. And he's like, dude, when I do all my due diligence and I find the owner and he's like just this tech whiz, and he's like, dude, I love doing it. And I was like, that's really weird because I used to do it myself and it's the most monotonous, boring, like I hate doing it, but it's absolutely necessary. But just having that fulfillment of like, once you get those people that do actually really want to be there, those A players, it's like, it's so fulfilling to watch them really enjoy what they're doing as well. It's not like they're just like doing a job. They're just like, no, I want to be here and I want to be the best. And I love being around people like that because I have the same mindset.
Yeah, yeah, 100%. And then I would say the other great thing is that we spend the time every single week talking about things outside of work, right? And it's great to see somebody fulfill that work. It's also so great to see your team members being fulfilled at home and progressing and seeing them, be able to, like some of our VAs, because of what they're making, are paying for their kids to go to college. They're paying for their brother or sister to go to college. One of them is in nursing school and she's going to graduate and become a nurse and leave our company. And we couldn't be more thrilled that she is following her dreams and driving towards that, and that we're helping to support her and her family in that time frame. So it's a really fulfilling part of running a business that I didn't expect jumping into it. And it just makes me that much more excited to continue growing what we have, to be able to make a bigger impact, and enjoying the journey along the way. I think that's one thing as well. What you see with people that kind of hit that threshold is they stop enjoying the journey. It no longer becomes enjoyable for them because they're doing the same things over and over and dealing with all the headaches, and they're not getting ahead of the issues. That's like, if you don't break through and get some help, then that's where you're going to end up being burnt out as a burnt out business owner that's trying to do everything themselves. It's not a fun place to be in. And I think all of us have been there at some point where we had to push through that ceiling because it was getting to a point where we had to make a decision one way or the other. So hopefully that's helpful and motivating to anybody that's feeling like they're getting to that place where they need to make a decision. On the other side of hiring is amazing once you figure out how to find the right people and train them properly. And it could take 1, 2, 3 hires until you figure out how to be a good manager. 100%.
Yeah. So I know this is only supposed to go an hour and you probably have somewhere to be. It's going really well. We could probably keep going, but I do want to be cognizant of your time. So maybe we'll have you come back and keep going.
Happy to.
Something like that. So there's a couple things. I want you to tell everybody like where they can find and follow you, but I also want you to tell everybody like when your meetup is or how they can get involved in your meetup. Because if I come to San Diego, I'm probably going to go it's during that time. But so
for sure. I mean, so you can find us. We're on Instagram at Stay Classy Airbnb Guys. The company is Stay Classy Homes. If you're an Anchorman fan, Stay Classy San Diego. That's where we came up with that name. And then the meetup is the third Tuesday of every month. It's at the Lafayette Hotel. It's a really cool spot in San Diego. It's just a fun vibe over there. They did a $33 million renovation to that hotel, and it's maximalist design to the extreme. It's really cool. And then, we also run a mastermind for this type of industry to help other people grow. It's called the $1 Million Host Mastermind Group. It's like $250 a month to be in, but you get the first 2 months free, I think, right now. And we're teaching sales and marketing on Mondays. We're teaching scaling and acquisitions and, hiring and the bigger concepts on Tuesdays, and operations on Wednesdays, every single week, sharing, everything that we've learned and what we're doing to be successful. And just, it feels so great to be able to help other people out and do that as well. So come find us.
That's awesome. Awesome. Matt, thank you so much for coming on. This was a great episode. I think it was very eye-opening for a lot of people, including myself. With that, I'll let Austin. Oh, wait, Scott, if you don't share our show or review our show, we're going to block you from listening. Scott. I don't even know you, Scott.
No, we're not.
No, we're not. Austin's
All
going to
right.
keep giving you properties. That's what Austin's going to do. No.
No,
But anyway,
Scott's my boy.
all right, we're going to
Yeah,
have Scott on.
Hey,
Get to have Scott on and tell us how he grew so fast and rapidly.
Yeah, there you go.
yes.
We'll incentivize you, Scott. Once you leave your W-2 and you're at, say, 15 properties, we'll have you on. There you go.
This episode's for Scott. All right, well, with the dedication to Scott, we'll let that and Austin go ahead and ring it out.
All right. Thank y'all for listening. Peace.